Hi, guys. I'm Evan Su. I am co-founder CEO here at Gamma Prime, and happy to be today's moderator. And this is a fascinating group of people. I would love to hear what's going on with pretty much every one of these companies because they are all at different fulcrum areas in this space. So we're going to do a couple of 2 rounds introductions, just something brief first, a little bit about yourself, maybe something that people aren't aware of about you or your company. That's a little less common. And then sort of, we'll start with a round of kind of forward-looking questions, which is, what are you guys currently moving towards within your organizations? Because all of you guys are at the forefront of various parts of this industry. So I think it would be fascinating to find out where you see the puck going, and therefore what you see the focus and where you've actually put the focus of your company for, to the extent that you can share. If it's a trade secret, I get it. But so I'll start briefly. I'm Evan Su, a co-founder here at Gamma Prime. We are a marketplace for hedge funds. We are essentially tokenizing hedge funds. Specifically, we focus on the non-correlated stuff. So there's no long short, there's no stocks, bonds, or things like treasuries. It's all unusual things. So staking, restaking, OTC deals like we've talked about, but it's also in the traditional finance side too. So we have things like reinsurance or litigation finance. So that's essentially us. And maybe something people don't know. I was one of the first people trading E-mini futures when they came out in September of 1997. So I've actually been trading for 32 years. Some people don't believe that, but yes, I'm actually in my 50s. So we'll pass it to you, Deribit.
Hi, good afternoon. My name is Jean-David Péquignot, or JD. I'm Chief Commercial Officer at Deribit, so looking after sales, BD, partnership, marketing, various things. So for those who are less familiar with Deribit, we leading crypto derivatives exchange, market leader in the option space in particular for listed product. If you have not seen the news recently, we've been also acquired by Coinbase. The transaction that closed last month. So we're also now part of a bigger organization, and with that comes also a bigger balance sheet and renewed energy to build in this ecosystem. About me, despite this strong French accent, I'm actually not French. I'm Swiss, so be careful next time around.
I have one. Awesome. Well, it's nice to meet everyone. My name is Luke. I'm the founder and CEO of Variational. Variational has a history as a prop market maker in the crypto space, and I come from a about 10-year background of crypto quant trading, hedge funds, and prop market making. But now we're incubating a DeFi project called Variational Protocol, and we have 2 layers on top of it. One is called Omni. It's a retail-facing perps platform with a very unique design that lets us offer 0 fees on 500 plus pairs and some really cool user rewards like loss refunds and others. We're building in a crowded space, but we have very unique technology there. I think what we might talk about more today is actually the second piece, which we call Variational Pro. It's infrastructure to bring OTC trading in crypto on chain. So essentially to automate the RFQ process and then the trading, settling, and clearing using stablecoins and smart contracts. So hopefully driving some efficiency there. A little fact about our company, or even about myself that most people don't know, Singapore was my home for close to 3 years, a little bit after my time at Genesis with Josh, actually. And I moved out to Singapore and made it my home kind of during the COVID days. These days we have a super remote team. I think we cover 3 or 4 different time zones all across the world. But Singapore feels like a home to me still, and it's been a lot of fun being back this week.
Hey guys, my name is Joshua Lim. I run the markets team at FalconX, which is a global prime broker focused on crypto. We're a trading firm effectively, and we do everything from spot and derivatives trading to lending and borrowing and DeFi and on-chain activities as well. It's obviously work with a lot of the folks on this panel as a trading shop. We're one of the largest trading firms by volume in the option space. We do a lot of things bilaterally under an ISDA, but also on exchanges. Yeah, one interesting fact, I guess, recalling some of the ways we've interacted with you guys and the other folks on this panel. I was involved in the early days of the options market in Tether. This is like kind of last cycle. People were really focused on hedging, like depeg risk on stablecoins. It's kind of funny, like a lot of people were focused on buying downside protection on USDT, but not a lot of people were doing it on UST, which is probably the stablecoin to be hedging at that time. But yeah.
Hi guys, I'm Dmitry. I work at CoinFund. We are, I guess, a bit of a varied investment firm. We've been around since 2015. July just hit our 10-year anniversary. Focused across venture on one side, kind of early stage. We have a growth stage vehicle, and then we have a liquid strategy. I'd say, the relevance here is we are both investors and traders. Investors in terms of kind of derivatives infrastructure, whether that is centralized exchanges, decentralized exchanges, other kind of derivatives focused infra and kind of solutions. And I guess, yeah, the fun part here is in my previous role, I was part of the team that invested in your old company. And I've gone from being an investor to, I guess, a counterpart and trading with you guys now in your current role. But yeah, we are sort of very big believers that derivatives are kind of one of the hot growth areas for crypto in general. It's sort of a story that we've seen with every other major asset class where derivatives are multiples the size of the underlying. And I don't think it should be any different in crypto. So here to support the kind of best-in-class businesses and best-in-class risk frameworks to help this industry grow in a sustainable manner.
I was cut my teeth in Silicon Valley, and one of the things we had a saying there, because it's San Francisco, which is don't mine the gold, sell the shovels, right? And the reason I love this panel is everybody here is selling shovels. Everybody here is part of the infrastructure that everybody else is participating on. So either a prime brokerage or people funding the actual projects, or on the cutting edge of something, building something new, or one of the top options exchanges. So what I really wanted to ask you guys is, where do you see the puck going? And not just an idea, but where's your company actually investing, right? Because if you're putting your money where your mouth is, you must think that there's something valuable there. And so this was the burning question on my mind, which is, what are you guys up to that you can share? And would love to start with you.
Sure. There's quite a few things going on. I think we've seen this last year or this last quarter or 2 quarters is a huge amount of growth in the option space. So 2024 was 100% growth in option volume at Deribit, and then this quarter will be the best quarter ever. It's probably 50% over the quarter before that, which was also a really strong quarter. So we've really seen a huge amount of adoption. We hear this institutional adoption stuff for like 3 years. So yeah, sorry to bore you again, but it's actually really happening in the option space right now. And so with that, we also investing in infrastructure that supports this and the leg further. So we have got a big project internally to revamp our matching engine. We want to go sub 1 millisecond matching on our engine. We have an older technology that has been done the job for the years past, but we recognize that the entrant right now are sophisticated enough that we need to give them like way stronger infrastructure. So that's really one big project for us, and that will allow us to also leverage what Coinbase is bringing into the acquisition they've just made in us, which is going to be merging also markets to provide a stronger, better marketplace where option perps, dated future, very important product for option trader, as well as spot, can live on one single infrastructure and at the top of the latency and low latency, best connectivity we can provide. So that's a big thing that we're building first internally and then with Coinbase together. And with that, we want to continue to grow the option market. So we've been historically really focused on institutional investor, and our bread and butter is BTC option, ETH. We launched Solana, which is now our third biggest market, but it's far behind the other two. So we want to see a stronger set of product listed. We want to always push that with the liquidity that people expect from like institutional exchange. So we're not going to launch 25 or 50 altcoin option with poor liquidity and missing quotes in the book. So that's not what we stand for, but we really want to participate into the growth of that market. And as a market leader, we think that's also a duty to provide that to you as customer or trader. So that's kind of the focus we have on.
Wow, so much going on there. I'm really the small fish on this panel, but I'll tell you guys about what we're building. And it's honestly going to be fascinating for me to hear Josh's answer to that question and a few others. But just a little bit about Variational. So again, on the history side, I come from 10 plus years in quant trading, and then market making, then prop trading in crypto. And when we decided to build in the DeFi space, Variational protocol, we were thinking and the question was how do you think about where the puck's going? How do you move the ball forward? And I'm noticing two trends. I'm gonna turn this into a two-part answer, so I'll yap for a little bit. One trend on the retail side, and then a trend that we're leaning into for the future on the institutional side. So on the retail side of our product, we call it Omni. We've actually seen a recent movement towards DeFi trying to compete with CeFi exchanges on zero fees. Essentially, this narrative of if we can run cheaper infrastructure, we can offer zero fees and some benefits back to retail traders. We're taking that one step further. We kind of consider ourselves on the bleeding edge of asking that question, even in a more meta sense. Where is value being extracted from the ecosystem of retail traders, and where can we give that value back to the users? So our big innovation is Variational Omni, which is our perps trading platform on the Variational protocol. It actually isn't an order book; it's an RFQ platform, and it has one market maker on the other side, a community-owned market maker called OLP. And the idea here is rather than the beneficiaries being external market making firms, the Wintermutes, the Seleni's, many others of the world, we keep the spread revenue, the value of that retail order flow within the platform, and we give a majority of that revenue back to the users through no fees, tight spreads, and rewards like loss refunds and others. So this is a very unique model. Time will tell how well it works for us, but we've launched our beta on the Arbitrum network, and it's been growing very nicely for us so far. So we expect more growth, especially coming into Q4. And that's, I'd say our one big bet that we're working on right now on the retail side is indeed that very interesting problem statement of how do we internalize that flow revenue from market making and find ways to give it back to our retail users. The other side, which I think is much more relevant to the backgrounds in this panel, and honestly something I'm curious to hear Josh's thoughts on, is thinking about how do we build infrastructure to better systematize OTC trading in the crypto space, particularly in nonlinear markets, which was a big pain point for me. So as everyone on this panel knows, but maybe not as much in the audience, let's just say it's a little bit of a pain to trade OTC in crypto right now, whether it's from the onboarding side when you're going through lengthy KYC process, through setting up an ISDA or master trading agreement, negotiating kind of what margin and credit might look like, whether it's check. Test. Okay. Sorry about that. Whether it's even for the RFQ process, when I'm thinking about, I have a trading idea as a hedge fund, or back in the day when we were clients of all of these other guys on the panel, and when I have a trading idea and I'm looking for, what is the price of this interesting structure on an altcoin option, on a, structured product, on a multi-leg trade, I'm in Telegram chats and Bloomberg chats and others trying to reach out to, the Wintermutes and Seleni's and FalconX's and others of the world. It's a very manual process. Then negotiation, because that's manual, we don't have quite as many dealers competing. Prices are a little bit all over the place. I think Josh might agree. And then when you execute a trade, the settlement is very manual. It's a little bit risky. In many cases, you're facing your counterparty completely bilaterally. Sometimes you'll use an escrow or third-party collateral agreement, but very rarely. And it's a lot of, again, manual signing of trading agreements, operations teams all over the world sending wires to top up margin. We envision bringing that on chain. So this is our for the future work that we're doing on the Variational protocol. It's essentially building a system to bring smart contract escrow and stablecoins to margin these, and an RFQ platform to systematize that entire flow. So the vision that we have for OTC trading in crypto, outside of the major products, which I think will continue to be on Deribit as the market leader, but there's a very long tail that I think needs automation and better settlement and clearing on chain, and that's what we're building with Pro.
And just so Lucas doesn't get away with this, it's not about the size, it's about the velocity. And I think, where you guys are going is an extremely valuable space. For those that have ever done OTC deals, it's like by carrier pigeon. I mean, it's like people are sending Telegram messages with each other, and like there is
Not that bad.
Sorry.
It's not that bad.
Yeah. Really? Okay.
Our clients love it.
Oh, okay. So just the space you're working in is fascinating, and the backing that the company has received is extraordinary as well, which is a vote of confidence in that direction. So,
Yeah. Along those lines, I mean, I think unlike my two previous colleagues, I think we operate as a principal trading business, right? So basically, whatever our clients can dream about, we can kind of put together and sell on the fly. And that's like the beauty of financial derivatives, is like you don't have to have any physical inventory on hand or any infrastructure or anything built out to be able to supply some kind of risk that the market wants. So I think we've been innovating a lot this year. Some of it's internal, a lot of it is driven by what's happening in the external world. I think the biggest trend this year has been the intrusion of equities into our little crypto kingdom. That really came about in earlier this year with the rise of like the digital asset treasury trade, basically. I think we've played a really big part in that as a firm. Like we've backed maybe on the order of like 25 of these things. A lot of it is sort of as a way to support some of our trading counterparties and clients that are launching these as sponsors. But a lot of it is also we are providing execution capabilities and custody and staking to these corporate treasuries. And the corporate treasuries are obviously a much bigger part of the landscape of institutional customers today versus a year ago, where it was mostly dominated by like crypto native liquid funds, venture firms, and high net worth individuals. So yeah, we're seeing a lot of that evolution happening. And then I would say, like, thinking about where the puck is going, we're building on that. Basically, like, we have now an internal expertise around trading equities. We have all the right kind of traditional PB relationships, the ability to, for instance, like source borrow and trade options and things like that in equities, which most people take for granted. But for crypto firms, it's not that common to have that connectivity to traditional markets. Even things like receiving stock is a lengthy process and a difficult process when you participate in a private, deal. So we've built all those pipes, and now what we're thinking about is sort of the next cycle and where we think crypto retains, some retail speculative interest, which is around like RWA assets, in particular around like stocks on chain. Either tokenized versions of stocks, so like the spot market, or perps. So we've built a lot of connectivity to protocols that we think might be market leaders there. I think by default you kind of have to assume like Hyperliquid will be there at the forefront, but we're also talking to a lot of other protocols that are trying to launch equity perp dexes, and how we could partner with them to be a liquidity provider.
So my take on this is kind of, I guess, twofold. There's sort of the trader and market participant who is on one side of it and facing guys like Josh, and we've been, I guess, if you look back at kind of what has been the defining feature of crypto markets, at least on the liquid market side of things for the last, I'd say 18 months or so, was until very recently it was a game of BTC dominance. So if you're a guy like me and your job is to run a liquid fund and outperform Bitcoin, and you can't do that, then you have no reason to exist. So I think one of the big stories of kind of why derivatives and why options volumes and futures volumes have gone up is there's a lot of funds like us who have been sort of looking at what's been happening in the market and saying, well, if the vast majority of this universe is kind of trending towards zero and hasn't done well, and my job is to outperform BTC, then how do I juice that? Basically, let me get involved with either BTC calls or trading vol or trading futures. So ourselves and many other kind of counterparts, we've been far more active in the derivative space around the majors over the last year, in particular, just because it's been kind of one of the main ways to do that. Similarly, I think obviously the participation in a lot of these digital asset treasury deals, that's also been part of the story. And obviously now increasingly, as we have the emerging signs of kind of market breadth improving, this kind of speculative fervor and the performance spreading towards, let's say, outside of the top 2 or 3 coins, we've been getting more involved in terms of altcoin options. And part of that is understanding what are the right counterparts that you can face and what are their setups. So do people have the right, settlement, clearing, margining functions? Not everyone takes variation margin. Not everyone has like an actual risk pricing engine. It's kind of amazing, the universe of what's out there. I'm lucky that I'm on a panel with some of the sort of best run firms in the space, but it's kind of amazing when you look out there and you look at kind of who are the counterparts that you can face. The degree to which sophistication is still a question in some places is pretty shocking. So that's kind of the trading standpoint. From the venture and like the investing landscape, we kind of view the whole space as going through sort of stages of maturity. So stage 1, I think, was what products exist. In the early days, it was like, okay, well, let me trade spot. And then if I wanted to, back in the early days on Deribit, it was, I'd like to trade some perps or some options, but they're BTC or ETH margined, right? Or the collateral. And then we saw the emergence of kind of spot or alternative collateral and stable coins, etc. So that opened up volumes and market size. I think as the market matures, what we've seen is kind of the emergence of a couple of other things. Number one, aside from the different types of products, so now, again, if you're facing centralized counterparties, either you can go face kind of the large centralized exchanges. Some are regulated, some are not. Some carry certain types of risks. But I think the big question for a lot of folks like us is, who is going to provide the best institutional grade infrastructure in terms of, is it isolated margin? Is it cross margin or portfolio margin? Are you able to actually deploy in a safe manner and get good liquidity and underlying depth? Secondly, it's sort of, what are the actual tools available? So we've seen the proliferation of obviously unregulated derivatives, but now that CME, CBOE, all of these guys are getting far more active, this also changes the game, because there's now dated futures, there's dated options, there's people innovating with sort of perpetual options as well, with kind of all sorts of hybrid instruments that are coming around. So we're taking a close look at what are the companies that we think are building products that will kind of provide the next generation of market activity. And then I think another part of this that I find quite interesting is, and I think someone alluded to it earlier in terms of, on the perp side of things, we've seen obviously Hyperliquid and a few others have catalyzed this feeling, or the thesis was decentralized exchanges will take share from centralized ones over time. That may very well be true, but the one place where that is absolutely not true today, thus far, is with options. So if you look at like the on-chain option space, it's pretty much non-existent. And it's really interesting to me. Like, I would love to hear how you guys are looking at this, because it seems like a great holy grail. We've seen lots of teams try and kind of address this. We saw people rolling out vaults. We saw AMM-based models, which obviously had their own flaws. I remember back in the old days of, I think it was with Open, kind of roll costs would be more than the actual premium. So it's just all sorts of like market inefficiencies. I think what I'm really excited about is, if I think, put my kind of 5 to 10 year cap on and think, where can this space grow to? Do I think that at some point on-chain options will be a real thing? Kind of what are the right mechanisms and frameworks to make sure that that happens in a sustainable manner? And I don't have the answer, but I'd be very keen to hear what you guys think.
Do you have an hour?
Or two?
You want me to actually answer? Okay. So yeah, this is kind of a throwback, but we started partnering with Derive, which used to be called Lyra. It's maybe one of the few surviving like on-chain options order books. We basically think this, like, the contributions of Deribit notwithstanding, obviously, like the most important place to clear risk in crypto today. Like, I don't think most people understand that, right? Like, that's the primary function of Deribit. It's just a clearing venue for institutional blocks of risk. Like, there could also be an alternative venue like on-chain that represents the same idea. I think the main hesitation is for most dealers to participate on-chain order book venues. It requires a lot of collateral. Certainly true for hyperliquid, which is a linear DEX, but like for options DEXs, it's even more of a problem because then you're mostly selling options and you're mostly selling convexity, and you have to post a lot more collateral. So like the biggest problem is like trust on these venues. And I mean, the solution is what basically the centralized exchanges have already figured out, which is off-exchange solutions for collateral. So we, I guess this is sort of on the topic of what we're building towards is potentially integrating a bunch of these DEXs with our own custody solution to maintain collateral off exchange while allowing people buying power on exchange. Yeah, we're trying to see if we can scale that up potentially with like other venues that are transparent and have collateral, visible on chain and things like that. So it's I think it'll get there eventually, but yeah, I think the one other missing link that most people miss with options is like it's not really a retail product in crypto, because it's not like if you want leverage, you're just going to trade perps. So it's really purely for institutions like us, like dealers and major hedge funds that have the sophistication to either run yield strategies or tactically position long volatility into events to buy and sell that risk in large blocks with their dealers. Yeah.
I'll hop in with a couple thoughts. I totally agree on two fronts, which I think are your major points. Number one, kind of the roadblocks to order book based. I wouldn't even just say in options, but just order book based DEXs in general, right? Like they're new. The technology in many cases is unproven. There represents a lot of risk to any margin or collateral that you have static on those exchanges. And frankly, even the matching in many cases is suboptimal, right? So depending on the product, especially if we're talking about linear products, that can be another roadblock to using these as again, like an efficient place to do either price discovery or, as you said, for institutions on options, an efficient place to do, blocking and clearing. So, the other piece, again, on the price discovery side is particularly when we talk about options, right? Like the depth of liquidity is hard to provide. There's a handful of firms right now that, and Josh's firm FalconX is definitely among them, that can provide that depth of liquidity across a variety of different products. And what Deribit has done very well is become kind of that matching ground, not just for clearing risk and the trusted counterparty there, but also, when we're talking about on-screen pricing and price discovery, like Deribit is the reference by which, the price of, vol in crypto is measured, or risk and convexity and everything else. So that's why we kind of took this approach. We're very RFQ heavy. If you heard me talk, about 5 or 10 minutes ago, you might have heard the term RFQ 5 or 10 times. And, broadly, what does that mean? It means we think about peer-to-peer trading, we think about peer-to-peer risk, and we think about, counterparties quoting on an as-needed basis. So rather than, posting margin ahead of time to collateralize, on an exchange, and you're quoting always with resting orders on both sides of the book to try to show some prices there and some depth, we think indeed, especially in these option style products on Variational Pro, it's an as needed type of thing. Sometimes that needs very frequent if you're, you're a vol trading hedge fund and with systematic strategies. Sometimes it is infrequent, once a month, if you're a foundation doing call right or put right style strategies for some yield and things like that, right? But broadly speaking, we think the right kind of mechanism by which we can solve some of those problems is number one, using RFQ for the price discovery piece and integrating with a competitive set of dealers. So the takers still know that there's some competitiveness and price discovery happening there. But number two is you have just-in-time collateral. And indeed, to Josh's point about kind of blocking and the risks there, that's where we think we can use a very, very thin smart contract layer with stablecoin collateral, right? And essentially handle spinning up a smart contract between two parties specifically, right? So let's say we have hedge fund A and market maker B, maybe it's FalconX and Brevin Howard Digital or something like that. That would be independent and segregated collateral, which is exactly what you'd expect from a tri-party agreement or a third-party kind of escrow. And I think it will take some time for institutions to get comfortable with adopting smart contracts and stablecoins for settlement, especially in size and, even on a newer platform like Variational Pro. But I think directionally that question of peer-to-peer trading, bilateral risk, and isolating that margin between the counterparties is where we need to go for RFQ and for trading in OTC derivatives in general. So totally agree.
I not quite agree on some of that, but I think you're missing some pieces with this, which, I mean, I get why you're doing build this, but what we're looking at right now is like the client who are coming, they want capital efficiency at, you know, at another level than what you just described, I believe. Like, so in Josh knows that very well with, you know, what he runs as a business. So we've built like 4 different margin model that speaks to different type of investor and risk taker. And we want to continue to be a trusted place where people can settle and margin their trade and as capital efficient as possible. And so, yes, we started with BTC and ETH option and settled. Now we have added USDC settled option as a secondary market to provide an alternative to this. We using different type of collateral to trade those options. So now you can use a BUIDL from BlackRock or USYC from Hashnote/Circle to collaterals. All these options now we know. So that's kind of where we're building. It feels like in the DeFi space, there's not this kind of complexity and this and sophistication, not yet. So far, what I've seen, actually, it's a nice business. It's a vault that is run by the few LP who eventually end up trading on Deribit. So I don't mind. But like, I think if you really want like a DeFi product that lives on its own, I think it needs to be a lot more evolved than what we've seen so far. The other aspect, I think, of DEX that will take some time is obviously the institutional names who just are about to get comfortable with Deribit. Now we have a VAR license and they're onboarding now. Banks, FCA regulated entities or SFC entity in Hong Kong who are entering the option market, and that's via that regulated door. And until they can run those relatively large risk on DEXs, I think that's going to take a bit more time. So there's probably use cases for DeFi and, you know, retail and make it accessible and maybe easier than sometimes what Deribit provides. But yeah, I think the bulk of the market will continue to live on the places like ourselves.
Thank you guys so much for this fascinating discussion. I think just to zoom out briefly, you know, a lot of people, we were digging into a lot of very specifics on like derivatives. Why does this all matter? Well, you know, if you just only have coins, the number of options you have is extremely limited, right? And all the hedge funds that are on Gamma Prime take advantage of various components of all these derivatives, because without them, you just are just like, well, then I just buy Bitcoin. Right? That's the only option. Like Dmitry was saying, why do you exist if you don't have something above and beyond that? And what we've seen at Gamma Prime, just to brief on what we've been up to, is that this is the gateway drug for institutions. If you're an institution and you're a family office, you made your money on real estate or selling shoes or whatever it is, you look at crypto and you think scary. You think like, okay, I want to get diversified, but I can't stomach this thing. Well, it turns out there's a lot of ways you can participate in the world of crypto that use essentially derivatives. For instance, you can be funding the perpetuals, right? So that's one particular way. You could be doing OTC deals where you're doing discount. Well, that turns out to be the number one thing that these institutions that come to us enter crypto with. They don't go in long short. They're not trying to make something go to the moon. They're going for something that has a good Sharpe ratio of 2.5 and like 15% return. And they're essentially funding the foundations of the different components within blockchain and participating with derivatives markets. So all of this creation that's happening, you know, in all these places is fundamentally enabling a much larger audience to enter into the world of crypto by giving them many other ways to participate besides just being long. So thank you guys for an amazing, fascinating discussion. And please give them a hand.